Hey guys, Bryant's here. Today is Tuesday, August 5th, 2025. This is the 0dte gamma exposure profile for the SPX. This gamma exposure profile was created 2 minutes after the market opens from Quant Trading app. This is the SPX's price action for today. This is the 15-minute time frame. Using gamma exposure as an edge, it can help us with identifying key places for where we want to enter and exit our trades. Confluence is the name of the game. So this is the SPX here. This is the SPY at the same time. This is the SPY with some advanced gamma exposure levels marked off from the start of the week. And then I have the ES over here just for an additional confluence in which we'll be taking a look at later. For those of you that are new to this YouTube channel, I trade SPX options, but I also trade ES futures. I use the SPY as my main instrument for analyzing price action. So you will often hear me use the SPY, SPX, or ES interchangeably. Let's maximize this SPY chart here for a second, and there's some key things in which I want to point out to you guys. You'll notice that there are some levels already drawn out on the chart. Those are coming from some scripts, so if I turn off all the studies, you guys can see a clean chart. If I turn on those studies, the studies that are on these charts are coming from the Quant Trading app scripts. So we have the intraday levels and we have the weekly levels, as well as your standard VWAP. This gray level on the chart right here is VWAP. This other lavender lilac color is the 2-day anchored VWAP. So it is a VWAP anchored from yesterday's open. This gray shaded area here is referred to as the Quant Trading app intraday zone. This dash blue level is the max pain for Friday's expiration, calculated from pre-market. If you are interested in learning more about these scripts, the link is in the description to Quant Trading app. And you will notice this same intraday zone here that is highlighted on the SPX chart. Now I went ahead and plotted these levels on the chart. I'm going to turn off all of the studies so we can take a look at these manually plotted levels. This is coming from the 0dte gamma exposure profile. So this is our gamma exposure at the start of the day here. These are generated at intervals throughout the day and saved within Quant Trading app. As you guys can see, this is the SPX for today's expiration. We are loading the 0dte because if we uncheck this and then we submit it, it's going to pull the Friday expiration, which is the weekly expiration. Now, pre-market gamma exposure is not as important because for the SPX, we need to know what the opening price is, and we want all of the updated options information, which is available after the market opens. So I'm going to reference this gamma exposure profile, which was generated about 2.5 minutes after the market opens. This is all in Eastern time. Let's recreate this graph, which means we can interact with it and see exactly what the gamma exposure looked like. 2 minutes into the market opens, this is where the SPX is. Let's turn on the absolute gamma for a second here and let's pay attention to what this profile looks like. Without much prior context regarding what gamma exposure is, we can already see some significant points on this chart. We have this massive green area here, and then we have this relatively large area on the other side. I don't have a name for this type of profile, but it is common when you will see a spike to one side and then a spike to the other side, and they're relatively even. The spot price is here, so it is closer to these levels than it is to these levels. So that's why these levels might be a little bit larger than these down here. As the day progresses, you guys will see that the gamma exposure is dynamic. So as the market starts dropping, we can see how this side starts to grow. But at this point in time, this is something I like to do because gamma exposure is so dynamic and it is sensitive as time is passing and price is moving. I like to pay attention to it at the start of the day and use the levels that are generated early in the day as a framework for what to expect throughout the day. One thing that I love about being a trader is that you don't need to try and predict anything. Most of the time you can wait to see. If you are unsure or if you don't have an edge for where you think price is going to go, you can wait for it to interact with these key areas. At this point in time, as the market has opened, you can say that there is very limited edge regarding which way the market is going to go. There will be a slight bias to the upside at this point in time. However, gamma exposure is just one part of the equation. So as the market opens, we can see that it goes goes up a little bit. But the first 15 minutes or even the first 30 minutes of the day, sometimes it's more of a coin flip in comparison for waiting for price to interact with the key gamma exposure levels. So I plotted this level here as 6295. That's this exact level right here, 6295. In quant trading app, we call this N1. It just means it is the highest gamma exposure strike on the negative side. This is 0. So anything this way is negative. Anything above this is positive. If it is positive, it is going to be green. If it is negative, it's going to be this deep blue color, but only when the net gamma exposure is green. As the day progresses, you guys can see right here, it starts to turn red. The reason it turned red is because the net gamma exposure has now turned red for the day. It's just a visual cue to let us know when the overall gamma exposure turns positive to negative, which is a subject for another video. So you guys can see here, 295 is N1, 290 will be N2. This is the second largest negative gamma. On the positive side, we have P1, which just means it is the highest positive gamma strike right here that is sticking out. And then this right here will be P2. So this is 360 and 355. That is 355, 360. We have 295 and 290. So we have our N1, N2, we have our P1, our P2. So our positive gamma strikes, our negative gamma strikes. This AG is just referring to the absolute gamma strike. That's what this large purple spike here is in the background. Another simple way I like to think of this is if this is price action here, price for the most part will move fluidly through these low absolute gamma strikes, and when it hits these high absolute gamma strikes, if it is going to continue higher, it has to work a little bit harder as it has to cross over this to continue up this way. So if price is here, it has to get over this little hump, and then it can continue down to this area here in which it has to work a little bit harder to get over this hump to continue in this direction. In other words, we can expect price to be a little bit sticky around here. We can expect it to be a little sticky around here, and we can definitely expect it to be a little sticky around here. To a trader, this can be seen as potential resistance, and this can be seen as potential support all the way down here. This can be seen as potential support right here. But with the price hovering around here, there isn't really that much of an edge. That means, again, 2 minutes into the market open, look at how much information we can discern from this. We have some sort of a structure for the day, as we can say this may be the expected range from the absolute gamma perspective from quant trading app. That is a decent range. However, I don't know right now which way I think the market's going to go. You have a few options. Either apply some risk saying the market is going to go up, apply some risk saying the market is going to go down, apply some risk saying the market is just going to stay sideways between these 2 points, or sit on your hands and wait to see. If you're going to wait for the market to get up to here, then you want to see some sort of signs within price action confirming that it is rejecting this level. If you're going to wait for price to get down to this level, then you want to see in price action some sort of confirmation that this level is holding as support. As traders who understand technical analysis, we have these visual cues. The simplest version of that is these rejection candles. This right here is what's called a hammer candle. Look at the price action that happened as the markets accelerated to the downside. This is a very strong bearish candle. Then we had a little bit of a mixed candle here, but it was still bearish. And then we had another extremely bearish candle. From an intraday standpoint, from a 15-minute time frame, given the current market volatility, this is an aggressive move down as the market dropped 21 points within 15 minutes. That is aggressive. But then look at the nature of this candlestick here as it hits this key gamma strike that we knew about within the first few minutes of the market opens. Instead of being hyper focused on the volatility at the start of the day with this choppy mixed price action, look at how sentiment changed as price hit this level. This is the first green candle, and not only was it the first green 15-minute candle after this accelerated move to the downside, it was also a candlestick in which every day trader, or any trader for that matter, should be able to recognize. It was a green hammer candle. But what's more important is that this hammer candle didn't form in the middle of nowhere. It formed in an area that the data is telling us is significant for today. 295 and 290 are key levels for today. The N1 strike will often act as support, especially when the market has made an accelerated move down towards it. The price of the S&P 500 is not just going to drop down to zero. It will inevitably hit some point of support. Whether this support is here, we do not know. What we do know is that the market is not just going to open here and then the next minute just drop all the way down to zero. There will be a point in which there will be some sort of support. This is not the type of price action you want to be a buyer at. Neither is this or this, but this type of price action here should pique your interest and make you start to think, maybe I should get long. Now, getting long can mean buying a call. It can mean buying a futures contract. It can mean selling a put. It can mean running some sort of broken wing butterfly. There's so many different styles of trading. So this video is not about the strategy to use regarding how you capitalize on this information. The intent with these gamma exposure videos is to show you, especially for beginners that can feel overwhelmed by all of this data, to slow down for a bit. Let the market open, plot these levels on your charts, and then wait to see what price will do. Stop trying to predict what you think price is going to do. Rather, wait for price to get to your key levels and then wait to see if there is a pattern that you recognize. Those of you that are Quant Trading App Gold members know that we have additional tools to use as Confluence for the SPX. But I want to point out the QTA Playbook and remember the importance of these setups. When price hits a key level, we want to see confirmation in the candlesticks, but it's a bonus when we see some sort of spike in volume. As we take a look at the SPY here today, where was the largest spike in volume? It was just as this hammer candle formed, but where did it form? At the intraday zone for Quant Trading App members, but that happened to be Confluence with this high gamma exposure level on the 0dte SPX profile. An additional confluence came at the SPY's gamma exposure levels. As longtime watchers of my YouTube channel know, at the start of the week, I plot out the high gamma exposure levels that are a combination of every expiration for the week. So Monday, Tuesday, Wednesday, Thursday, Friday's gamma exposure profile. I then plot the levels on my chart and I leave them up all week. In the Quant Trading App Discord, you guys will find them in my notes here. So this is the profile at the start of the week generated from Quant Trading App. These are our high gamma exposure levels. These are the expirations here. So Monday, Tuesday, Wednesday, Thursday, Friday. I then take this information, I plot the levels. So here's P1, here's P2, here's N1, here's N2. The same information. We have the absolute gamma turned on. I'm just taking that information and then drawing it on my chart at the start of the week. And I've been doing this for weeks now. Every single week, it creates a structure for how I'm going to approach the markets. So that means at the start of the week, we already knew this area here is an area of large, high positive gamma nodes. They're so large and so consecutive next to each other, I decided to make this whole area green as a reminder for myself that in a case like today, I did not know the market was going to sell off straight into this area, but I know what to look for if the market gets into this area. I'm going to have some sort of a long bias while the market is here. We don't know it's coming down here, but if it does reaches down here, we know what to expect. This is the confirmation right here. We're seeing our hammer candle. We're seeing a spike in the volume. This is confirming that there is a lot of activity happening in this level. There are a lot of market participants here. So between 628 and 627, I'm interested in being long the SPY, and definitely at 626. It did not reach down to 626, but it didn't need to, as we had our 0dte confluence on the SPX. We also had the quant trading app intraday scripts letting us know this. So there's so much confluence here from the weekly gamma exposure, from the 0dte gamma exposure, from the quantitative scripts from quant trading app. And we can throw in supply and demand zones on the ES. As this area here, there was a lot of price action last week. We can extend that area out here and we can see that this is a return. So price broke out of this range here and then it came back to this area here. There's a lot of activity here. The volume profile is letting us know these are high volume nodes in this area here also. In quant trading app, we have this proprietary SPX Trade Engine. This is the data from the trade engine in this channel here, and it is showing us the 0dte gamma exposure as well as this graph that is taking all of that information and putting it on a chart. This is sort of a visual representation of the trade engine's brain. This is 1 minute after the market opens. This is the candlestick price action here with a bunch of data on the chart that I won't get into everything as it has been covered in previous videos. And this video is not dedicated to just this graph, but I do want to highlight some key information on this chart. The first thing we see here is this expected move from the open to the upside and then the expected move from the open to the downside. So what this is saying is, according to the options market, the +1 expected move is up or down this much here. So about 23.5 points. That is the expected move from the open. We have the highest positive gamma strike at this point in time, which is 355. We have the strike with the highest put volume and so forth. But let's just play this out here. This is just a bunch of the screenshots then put into a video so we can watch it happening in real time. So as the market is moving, we can see that this now is the highest negative gamma strike. So 295. So I'm going to press pause here. At this point in time, look at what's happened to the absolute gamma. It has dropped down to this level. So the absolute gamma is now 295. This is a proprietary level here for quant trading app members. So this is 6,300, also dropped. So we have a bunch of key levels all combining around the same area between 6,300 and about 6290. This area here becomes a major zone of confluence. However, this is 10:50 a.m. Eastern time, so an hour and 20 minutes after the market has opened. This is just adding extra confirmation to what we already knew at the start of the day. 2 minutes into the market opens, the gamma exposure profile already told us this is a key area. Be ready to act. There's probably going to be a trade that is going to be presented to you if the market got down to this level. At this point in time, did we need to predict the market was going down here? No. Did we know that the market was going to go down here? No. Does that matter? No. None of that mattered. What matters is now that the market is here, what are you going to do? This should match your criteria for a setup that you would like to act upon. And again, this candlestick right here with the spike in volume on the SPY is letting you know a lot of other traders and algorithms and machines and high frequency systems are operating right in this area. This is an advanced tool that is now telling you, hey, there's a lot of things happening in this area. As these gamma strikes are moving, these quantitative levels are combining around the same place. As we continue to play this out here, let's see what happens to price action. Now this is about the close of that 15-minute candle. It is now 11 a.m. Eastern time, and we close to get that green candle that I was pointing out earlier. The market has now gone past the expected move from the open. A trader can now say, hey, I think it's going to bounce back to at least the expected move from the open because it has gone too far. That means you can pull up maybe the 63.15 call. Maybe you want to use the max pain as your target and go with the 63.20 call. Maybe you want to short the puts just below the low of day. Again, your method for how you're going to execute on this information is to is completely dependent on your style of trading as well as the risks that you like to put on your trades. But as we play this out here again, we can see the market now holds this level. There's extra confirmation here as the absolute gamma is confirming that 295 is a strong level here. The power strike is letting us know this is a powerful level right here, which is 6,300. The market then begins to bounce. Where does it meet its first sign of serious rejection? Right here at the expected move from the open. That is not a coincidence. It retraces back to 6,300. Then it continues to make its way up to where we would expect it to go. Again, back to the expected move from the open, ultimately hitting the max pain strike of 320 before it rejects. The max pain strike for the 0dte is going to act as a decent support or resistance level, especially when there's confluence with another strike. I'm just letting this play out here so you guys can see how the quant trading app Trade Engine operates throughout the day. And ultimately at the end when it closes, this is as the market is closed, we can see that where was there the largest amount of volume. I believe it's combining the information from the SPYs and the Qs, as the SPX does not have volume. But nonetheless, we can see this is where the spike happened right here. So if you did not know where to act, the volume is telling you. The candlestick is telling you. There are so many data points that are also telling you, hey, act here, act here, act here, do something. Instead of taking trades in places where there's nothing happening and you're just guessing and speculating and throwing your money around and gambling or trying to predict, try to erase that methodology out of your brain. I promise you it will help you as a trader. Take the word predict and throw it out of your vocabulary. I've done a video on this in the past that I'll try to leave a link in the description down below about this idea of predicting price action. You don't have to approach every day with that thought process. It's a lot less stressful if you just wait for price to get to your key levels. Even if you trade spreads and you wanted to trade something a little bit more non-directional, even an at the money iron butterfly worked at this point. But I like to give butterflies at places like this no risk to a particular direction. This type of setup with this much confluence, I consider to be an A+ opportunity as a trader. Guys, I've been making these videos for years and I've been making a ton of gamma exposure videos as well. However, I get the same questions over and over again, and especially for beginner traders, a lot of you tend to get confused with gamma exposure, and I empathize with you guys, but it has become tiring answering the same questions over and over and doing almost the same videos over and over. So the time I think has finally come where I would like to do some sort of in-person workshop with you guys. So I'm leaving a link to a form in the description of this video that you guys can fill out, as I'm going to start gauging interest to see how many of you are actually interested in taking a deeper dive into learning gamma exposure, especially from a quantitative developer such as myself. The plan is to make these workshops 24 hours in total, spread across 3 days. You guys can chime in regarding what type of schedule you would like. If you think 3 days would be too long, a little bit of information about yourself as a trader, and I'll try to make this happen before the year is up. I've been asked over the years if I offer anything like this, and I have not, because it is extremely time consuming. I am a filmmaker outside of trading and coding, and that eats up a lot of my time. But I have realized one of the reasons I love filmmaking is the collaborative aspect of it. And as a trader and a programmer, someone that is spending almost all day looking at code, I'm not interacting with people, and there is a joy that comes from interacting with people on an in-person basis. So I'm not interested in doing some sort of online course as I've been asked to do in the past. I even contemplated writing some sort of book, but the thought of doing that tires me, as I've typed out almost 50,000 responses over the past few years in Discord alone. If you just come here and just even search for me in here, you guys will see how many responses I have. Typing out so many lengthy messages, it has reached a point where I'm not interested in typing as much anymore, which you guys have noticed I'm not responding as frequently as I did. And on YouTube, I rarely get back to you guys' comments. However, as you guys I'm sure would have noticed on this YouTube channel, I enjoy teaching and I enjoy breaking complicated things down and making it as simple as possible and taking the information and making it applicable to your trading. I think it would be a lot more effective to have something that is in person with a group of traders. Depending on how many guys of you would be interested, that would determine how large of a venue this type of workshop would take place. As a filmmaker, I attend workshops. When I first started day trading, I attended seminars and workshops and I took courses in person. And I do think the time has come for me to finally seriously consider this. It will mean I will have less time as a filmmaker, but I think I would meet the same level of satisfaction taking on less film projects and spending more time in person actually educating you guys on gamma exposure and showing you real live trading examples like in this video, but also using some of quant trading apps historical information to go back in time to not only see what the SPX Trade Engine showed from quant trading app, how you can see you can improve your edge by using some of this data, but actually being able to take a look at specific days, and you'll start to build a framework in your mind for, hey, at the start of the day, if I see this type of profile, I generally know what to expect, especially if price gets down here, or if price gets up here. What do I do? What type of strategies do I want to implement? Do I want to run some sort of butterfly spread? Do I want to sell puts? Do I want to run an iron condor? The answer to a lot of these questions, you can have some sort of an idea at the start of the day what your trading is going to be like. And because Quant Trading App has an archive of this data, it means we can go back and see what the gamma exposure did. So on a day like today, market's at 320, then it drops 317, and then it reaches that 6295 area. We can see how large it is. It's going to be hard for the market to now break that level. We can scroll down here and see when it actually hits the level, what did the absolute gamma look like? Well, let's pull up the information. Let's turn this on and we can see this is that massive hump. So the market was all the way over here and then it dropped. And when it dropped here, it's going to take more energy now. Remember, think about it as if it has to get over this hill. It's going to take more energy for it to pop over this level and then continue lower. On top of that, there is very little interest lower. As we can see, the net gamma starts to return to zero, which is right here. The absolute gamma is almost non-existent. Things like this are a clue that the market is probably going to hold as support at this level. But even if you don't understand this information, price action is telling you this, as we can see it in the hammer candle forming here. It is telling us this in the volume that is spiking here. These are the type of clues that you want to have. You will end up telling yourself, hey, I don't even think I want to take a trade unless I see some sort of A+ setup that has this much confluence, because I have enough of an edge that is worth taking the risk for myself. That is the type of trader you want to become. Very disciplined and very patient, and that you can duplicate time and time again. So link to this form will be in the description and at the pinned comment in this video. I look forward to hearing from some of you guys. Leave a comment on if you learned anything. Subscribe to this YouTube channel if you are new here. I will leave some links to previous videos that I have done covering 0dte price action around using gamma exposure profiles at the start of the day. I used to use 15 minutes after the market opens, but there has been an adjustment to Quant Trading App this summer where it aggregates and caches the profile just a couple minutes after the market opens, because sometimes 15 minutes might be a little bit too long for days in which the price action moves very quickly. And I've spoken to some of you traders, and you guys, some of you actually do like to trade within the first 15 minutes. So that's why this was actually adjusted. There are some other updates that are coming to Quant Trading App over the next couple months. Stay tuned for those. Again, link is in the description to Quant Trading App. Thanks for watching, guys. I'll catch you in the next one.